Coming up this hour, Peter Tchir of Academy, with stocks poised for a strong start to the new year and a big pro-sec focus. Mark Chandler of Bannockburn following the dollar's worst year since 2017. And Dana Peterson of the Conference Board looking for a clear read on the economy. We begin this hour with stocks higher following 4 days of losses. Peter Tchir of Academy writing, we need to make sure we pay attention to the rest of the world. There were a lot of opportunities around the globe last year, and there will continue to be going forward. Peter joins us now. Peter, great to see you. Happy New Year.
Happy New Year, too.
So you talk about the rest of the world focus. Is it at the expense of the U.S.? Is it only if you do see the dollar continue to weaken?
I think the weakening dollar is going to continue to be a story. I think that's going to be a big role in this. But I do think emerging markets could do very well, especially Latin America, South America. I think we have turned our attention to Latin and South America. Look what we're trying to do with Venezuela. Assuming that is successful, I think then we turn our attention to working with Mexico on their cartels. So I think there's a huge opportunity within that space for more and more business. And again, I know we've been talking about America first, but we're not talking about America only. So I think as we try and build out these industries, these things that we need, there is a dawning realization within the administration. We are going to have to work with our close allies and friends, and close can both mean, physically as well. So I think Central South America is going to be a beneficiary. So I like that part of the world best. And Europe's going to have to figure out something to do. I think Europe's going to be a bit slow on the uptake, but I think they're eventually going to figure out this production for security and rebuild their industrial base as well.
You're bullish on Latin America. Some of the changes you're thinking about could go either way. And I think a lot of people feel some level of ambiguity when you start talking about Nicolas Maduro and regime change over in Venezuela, and you start talking about a question of whether this is going to be a benefit or whether it's going to be a detraction to some of the production in some of these areas. I'm just wondering, why do you see it as an unabated opportunity, even at a time where the U.S. and China seem to be tit for tat in South America?
So I think that's a great point on China. One, I think, look what we're doing with Argentina, right? We provided the swap lines. We are going to try and rebuild our foothold into Argentina. I think we will be successful in pushing the drug trade out of Venezuela, slowing that down. And then again, I think that will quickly turn our attention to the cartels with Mexico, working with or without Scheinbaum to push on that. So I think you're going to see a lot of good coming out of that. The other thing you are going to see is this ongoing friction between China and the U.S., whether it's oil in Venezuela, whether it's oil in Iran. And I think Dan and I have talked a little bit about this, but I think there is going to be real competition between the U.S. And the one thing I don't love about this morning's rally is like, we're starting because of all the success of Chinese data centers and Chinese AI chips.
Yeah.
I don't think that's positive for the U.S., to be honest. I think we're in real competition.
That was exactly my read this morning. I mean, we're rallying. All these U.S. AI companies are trading higher in the pre-market because China's doing better. Makes very little sense. I also think it makes very little sense that we're going to somehow stop the U.S. drug problem by working on the supply issue. I mean, don't forget, the reason that we have a drug problem is because we demand to use these drugs, right? American buyers are the main issue here. Does PROSEC have any, a change in that?
No, but I do think we're seeing kind of law and order. If you look at the recent outrage over potential fraud in Minneapolis, right, whether it's true or not, you're starting to see kind of this concept, I think. And you look even San Francisco. I have not been there in the last 6 months, but I've told it's night and day. They've really been working on cleaning up. And I think a lot of what we have to do is just enforce the rules that were in place. We, for years, chose not to enforce the rules that were in place. I think you start putting that back, that shuts down a little bit of the demand, or at least the ability to get that demand filled. So I think it's all working in conjunction.
Right. I feel like the Sackler family is still doing pretty well, When I think about your PROSEC thesis, I really think about Intel the most because, one of the big problems we have is that all of our chips that we need, that we're reliant on, are made in a territory claimed by China, right? What are we going to be able to do about production here in the U.S.?
So, normally I don't talk about single stocks, but we made the exception with Intel.
Okay.
But we made, because I think it is going to be such a key part of this, right? I think the fact that the U.S. government put 10% into that is going to encourage Trump and the administration to try and drive business Intel's way. And again, I think if we're right on this PROSEC, so this is all about resiliency, right? It's like, how do we produce things for our own security? There's going to have to be more and more domestic. I think there are other U.S. companies on the chip side that will do more and more here. I think just because of that investment the government made, Intel is going to be a big beneficiary. Look for more and more deals to be announced. Their technology is good. It's getting better. I think that is going to be one of the key growth areas. I know it was up 80-some-odd% last year. I think it does extremely well this year. And that's probably my favorite pick within the data center AI because it fits so perfectly with our production for security as well as the AI growth story.
Well, how much is it going to be government support and how much is it going to be actual ground up success in the business model, right? I mean, does this sort of national selection of champions work when it comes to success in business?
I think it can. I think, one, the U.S. is just a massive consumer. So if the U.S. starts encouraging people, hey, we want to buy stuff, but we would like Intel inside, that makes a difference. I don't know whether it's the way we should go about it or not, but I feel that that's the way this administration may go about it. And separately, I think the technology is good. So sometimes if you just need that little nudge, maybe that's what occurs here. And again, I think they've been doing a lot to do this. They are seemingly, I think, getting better at separating their chip design business from their chip manufacturing. And I think we are just at such this early stage of people really thinking about ProSec or production for security or resiliency that there's a lot more going on. We're going to see this. We're going to see this through the electricity industry, whether it's nuclear. I just think, and again, this is an administration that is well aware that if stocks are not doing well coming into the midterms, it does not bode well. So look for lots of pushes to get the stock market going.
We see this right now in the metals trade. We just saw the best year for gold and silver. You could say gold is a precious metal. It has to do with something about the de-dollarization and something other than some of the industrial uses. But we see it in copper. We see it in aluminum. How much is this just the beginning versus the end salvo that we see in this trade?
I think it's at the very early stages of this because one, and I admit, right, I think if we're going to try and build factories, if we're going to try and do some of these things, again, we're not going to try and produce everything ourselves, but we're going to try and produce more and more. Those are 2 to 5 year plans in many cases. In the electricity space, it could be 3 to 7 years. Steel, aluminum, right, 3 to 10 years. The build out of those factories and those facilities, it's going to put huge demand on commodities, right? You are going to need commodities. You're going to need the Cats. You're going to need the Deeres, the Navistars of the world to build out those. So I think you're going to get the job growth, not from the actual end facilities right away, but from the build out. And that's just starting.
Doesn't that speak to inflation? Doesn't that speak to something that people have basically shrugged off as a significant risk in 2026?
Yeah, I think we're going to have a steady pace of inflation. I think it's going to be there. I think the only thing offsetting that is going to be there is going to be some deregulation in the U.S. in terms of a lot of the mining, and I think that will help keep a lid on some of the commodity prices. I think it's going to be hard on things like copper, where we don't have much. I think oil and gas are going to remain relatively cheap, particularly oil this year. So I think that will help offset some of this. I see inflation kind of being this steady state problem. And again, I think it's going to be persistently in that 2 to 4%, probably hovering around 3%. I think tariffs start taking a bit of their toll. I think your last guess was spot on, where I think people forgot how much was front run, and we're only starting to see that bite. We're only starting to see people like, hey, we've used up a couple of quarters of maybe we had some things that we could play around with, and now it's like we're back to business. We need to make our margins. So I think that's going to be an ongoing state. So I think it's going to be hard for bond yields to do great this year. On the other hand, I think they're going to do okay.
Peter Tchir of Academy Securities is going to be sticking with us, which is a wonderful thing. And we'll continue the conversation with Peter Tchir, head of macro strategy at Academy Securities, who is still with us. Peter, we're talking about how you are optimistic on Latin America. How much do you see it, though, as ground zero for the international disputes, whether it's the U.S. versus Russia, whether it's the U.S. versus China? I mean, how much is this the new ground zero?
Yeah, I think it really is. And I think 3 things kind of we've been talking about will really resonate with this particular story. One is it's about law and order, right? Enforcing sanctions that have been on the books for a long time. We chose not to, enforce those sanctions. You start putting that on. I think the other thing people are missing, and it's starting to come through loud and clear, is whether it's in Russia and Ukraine, whether it's in Venezuela, to the extent there are peace deals, Trump is going to do everything in his power to get U.S. companies a big advantage in the rebuilding. So look for that to play a big part of the U.S. growth story, is whether it's peace in Russia, Ukraine, anything in Venezuela, U.S. companies do phenomenally well. And then finally, it's just going to be friction everywhere with China, right? China was able over the last 2 decades to kind of set their tentacles into all these countries across the globe. They used their Belt and Road Initiative very effectively. And now we're going to be pushing them out. It'll be really interesting to see what China has to say on some of this. And weirdly, and China's been incredibly quiet on Russia. All these pictures over the past few years, Xi and Putin, best buddies, that are going to work together. He's been very quiet. So I want to see where all this plays out. But I think when you're looking at this, whether it's from a shipping perspective, where you want to build your new plants, you have to be focused on Central and South America if you're an American company, and a little bit reluctant to be too invested in Southeast Asia right now as the U.S. turns its attention, in kind of the Monroe Doctrine too.
Yeah, I was thinking that as well. It's pretty interesting that President Trump has put his own spin on the Monroe Doctrine. When I look at China, and I could be wrong here because I'm so focused on the auto industry, I see the rare earth minerals as their biggest advantage over us. They have the mining and refining capabilities that we just don't have, right? MP Materials is a very small company. How do we turn that around? And am I right that it's so important?
Yeah, I think it's very important. One, I'm much more focused, and I think when we talk to the administration, they're much more focused on the refining and processing, right? China controls about 60% of the extraction of the rare earths and critical minerals. So there is gives the ability to buy it on the open market. It is going to have to come down to the refining and processing of this. One, I think it's going to take deregulation. So we're aware that some states are actually going to be trying to be very favorable to encourage some of these businesses to grow, right? Because it's been something we avoided. It's going to take time. It's going to take deregulation. It might take some government investment. Those are the directions headed. I think we need to start. And when I look at this battle between the U.S. and China, I feel that China's sitting there trying to say, we want to catch up on chips, but our lever of power is these processed and refined, rare earths and critical minerals. How do we weigh on that? And they're balancing, can they catch up on chips? And what I'm mostly afraid of is that we go through these negotiations, and as far as I can tell, there's still no final deal. Both countries are like, hey, when we're back 2 years, we're going to be in better position. For us to be in better position 2 years, we need rare earths and critical minerals processing and refining done here. For China to be better, they need to catch up on AI. A little bit worried China might beat us, but I think that's the game that's being played. I see a sense of urgency that's occurring with this. I see that government investing. And again, I think you start talking to private equity companies, right? They're now scouring, through companies. Who's got mining rights that have been ignored? Who has maybe some interesting patents or technology that we weren't using when we couldn't produce lithium dioxide cheaper? So I think this is all just starting. People are going to cover it. And what's to me is really exciting is, yes, the U.S. government kind of jump-started this process. It's U.S. capitalism that's going to drive it. U.S. capital is going to see, hey, there's opportunities. We can make money on this kind of pro-sec concept, building these things out in competition with China. That's going to flow through, and I think you're going to see corporations adopt that behavior as well.
But the deregulation part is really key here, right? And that's been a problem not only for rare earth minerals refining, but also for power generation. I mean, try to run a power line from your plant to the end user, and good luck. It's going to take like 14 years to get those licenses. How effective can the Trump administration be in this deregulation?
I think reasonably effective. I think, one, you're going to find some states that are very pro-business, that they want these things. They want to see the growth in their state. They want to see the tax revenue. They want to see the job. So I think you're going to see some, red states, probably in the South, do very well, that they are going to accept deregulation. They'll embrace it. Even California, in some parts of it, saying, hey, we need some of these things. That California is exploring, right? I think there's this realization that we went too far on regulation. Having said that, I think some states are going to fight this. It's going to become an election issue. There's going to be that certain crowd on all of these things, unfortunately, where if Trump says something, 1/3 says that's the greatest thing ever, 1/3 says that's the worst idea ever, and we lose the dialogue. So I think we need the dialogue. We need this. But I am encouraged. What we're hearing is some states really going to be aggressive about this. That will let it go. And I think even with the data center and AI, right, there's going to be a bit of a realization that, to me, things that don't require low latency, so some of the technology can require higher latency, it's going to move to the states that are most conducive to allowing electricity production. It may move even closer to the source. I see a world where you see some of this look a little bit like oil rigs. You get shipped to your data center, you work there for 2 or 3 weeks, you get shipped back. So we're going to change where these data centers go, especially for the things that aren't low latency.
Are you worried about regulation on AI? You mentioned China a couple times already this morning, and the potential that it could beat us on AI. Regulation has to be a key part of that, too, and a lot of people are going to start pushing for it.
And I think we've done a pretty good job in terms of that. I think, Europe's a mess, right? Europe has so much regulation, all the privacy issues, they're going to get nowhere on AI, plus they don't produce any electricity. So not worried about Europe, much more worried about China. Also, India, I think, has a real potential to become a burgeoning player in this space, right? NVIDIA's moved, equipment there, right? It is a really interesting play. I think we've got to be very careful on the regulation, and I agree that there has to be regulation because you see some crazy stuff, as I think you guys were reporting over the weekend. Having said that, I think we've got to be careful not to limit ourselves too much. The other wild card to me is the Middle East, right? I think in many ways it's great that we're selling chips to the Middle East. On the other hand, I'm not sure we really want them to become a data center or AI capital of the world.
You're talking about becoming more resilient. How do you know what risks to become most resilient against? What are sort of on your range of risks that companies should be watching out for?
And, to some extent, you just go back to first principles. What do we need, right? And let's say if China shuts us off from rare earths and critical minerals, how quickly does half our manufacturing or finished products? Very quickly, right? Even if they shut off our Chinese factories or Indian factories from getting those. So, okay, boom. Let's fix that. Let's make some level of these so that we have months and months of supply without China. I think you look at the data center and AI with chips, right? If China was to do something to disrupt even shipping out of Taiwan right now, very innocuous, very gray zone type things that they could do with their maritime militia, what happens to our industry? Bad. So we need chips. So I think that's kind of, you look at it, it's kind of, when I go back to even sustainability, right? I think one of the things maybe that was made, you look at what humans need, right? We need air. You don't live without air very long. Then you need water. You don't live without water. Food, you can actually live a decent amount of time without food, relative. And then with higher, temperatures and stuff, you can live a long time. So I think when we're looking at this, I'm kind of looking at the industries. What do we need to be sustainable and resilient? Let's pretend that China wants to be bad. What would China do to try and hurt us? Let's make sure they can't. It's deterrence on an economic side. So on the military side, right, you have the big missiles to make sure that they don't want to attack you.
Yeah.
On the economic side, you do the same thing. You make sure that you're prepared for them.
Peter Tchir, wonderful to see you. And now I'm looking at ChatGPT. Go bag. What should be in my go bag? Peter Tchir of Academy Securities. Always great to see you.